Welcome to our Inside Insurance video series. My name is Brian Morrissey. I head up insurance in KPMG, and I'm absolutely thrilled to have two senior professionals here with me today, both of whom I've worked closely with over the years. Mark Burke is Chief Financial Officer and Executive Director of Aviva Ireland Life. He's responsible for finance, actuarial and investments, and I'm sure a lot more. He joined Aviva in 2021 as CRO, progressed through to the CFO role in 2023. And prior to joining Aviva, Mark worked with Mediolanum Asset Management and the Central Bank in a variety of roles. Brian Holland is a chartered accountant and is currently Head of Group Finance for Hannover Re, a role he took up in February this year. Prior to that, he was CFO of the Irish subsidiary of Hannover Re. And in earlier life, I had the pleasure of working closely with Brian as he worked with us here at KPMG in the insurance division, leaving as a director back in 2013. How time flies. So welcome to you both. Delighted that you're both here. A few questions which we'll throw out. Given your role as finance leaders in your respective organisations, what do you see as the main opportunities and challenges as you think about it? And probably looking at maybe from a functional perspective in terms of the roles each of you play in your organisations.
Yeah, maybe I'll take that, Brian. I suppose, as I said earlier, or you said earlier, I should say, I took up the role as Head of Group Finance back in February, and I really see that role as much more of a coordination role across the globe. We've got offices in all corners of the world, you might say, and it's about how do we bring that team together? How do we make sure that everyone is thinking about things the same way, coordinating things and harmonising things? We really don't want to centralise functions, but we want to harmonise the functions. And as my role of being sort of Head of Group Finance is to look at those, bring the people together, make sure we have the communication lines and dialogues that can really get people pulling in the same direction. And then if we can get that, we can then bring any efficiencies or improvements that we see in any part of the group across the group. But it's about bringing people together and that dialogue, which is very important.
I might come at, Brian's comments maybe from more of a local perspective. So I'd say for us, really, it's around the cost optimization piece. A lot of discussion really around, say, zero cost planning. I would say an awful lot happening around the better use of data within an organisation, and perhaps the general theme for us is really around driving more automation within a finance function, deploying better kit. All designed to try and get our team spending a lot more time in the value-added space. So it's far less about churning the wheel on the production process and spending all that time on the value-added areas. So perhaps a shift or an evolution really of the finance role a lot more into that business partnering space.
And I'm curious, and I suppose it's more in the context of the respective roles you have, the parent-child relationship, the group, subsidiary dynamic. How do you think about that?
Yeah, so it's a funny one, really. I think for us, really, it's all around really delivering on what you said you would do. So, in some respects, I almost see it as trust, efficiency, and insight. So, we'll say a group having trust in our financial reporting capabilities, trust in our forecasting capabilities. Obviously running a tight ship as best we can, and trying to pivot more into that value-added space in, say, providing meaningful business intelligence to how an organisation is doing. All coming back to just do what you said on the tin. Don't deliver any surprises. Grow your organisation. Be efficient. Be insightful, and just do what you said you would do. In essence,
I suppose I've had a perspective of this from both sides. I mean, I sat in a subsidiary for best part of 10 years being CFO, and now I've moved to the group role. And I suppose similarly what we've done, when I moved to the group, someone moved from the group to the subsidiary. So it's good to have that dynamic and that change of things. Because ultimately, with my hat on, audit matters is the group first, and then that has to be it, because the group is a listed entity. That's the key organisational part of Hannover Re. And everyone across the group knows that, because so long as the group is strong, the subsidiaries and branches are strong. We, of course, are focused on the subsidiaries and branches as well, because we need to make sure that everyone is looked after. But I think we have to get the message out first that, look, what's number one priority is the group. But we have said, and I've said to all the teams in Hannover, is if anyone from a group or subsidiary or a branch asks us for a request, listen, don't say no, right? Don't say no to requests coming in, because we have to look after everyone. Because on the other side, we're only as strong as our weakest part or point, and we have to look at it like that. Sometimes we will end up saying no, but it shouldn't be a blank no when that message comes in. And then, I suppose, to Mark's point as well, like, we have to put the tough guy group hat on sometimes and say, deliver your numbers on time, no deviations either way, because we have lots of different things to look at. Or if you're going to have a deviation, communicate that early, and we will see what we can do, or how we look at a group at that. But we are actually all one team, right? And I said in the earlier point you asked, Brian, it's about communication. It's about making sure that those lines are there, that there's a trust built up between the subsidiaries and branch, because everyone in the branches and the subs wants the group to succeed as well. And we know that, right? And we all want to work that way. But we do sometimes have to put the firm finger down to make sure that we do get everything delivered on time.
Heavy thumbprint there. Yeah, very good. I suppose reflecting on, the last 2 years, probably the last 2 to 3 years now, IFRS 17, you could view it as a major accounting change, but actually it was probably more fundamental in terms of a realignment of systems, IT, technology, as well as the finance and actuarial functions. As you reflect now on those projects, the money spent, what learnings would you take from it today in terms of, okay, how it was done and how you might tackle IFRS the next time it comes around, or solvency?
IFRS 17 is a beast for sure. It's almost as though IFRS 17 is back where we had the Solvency II regime back when it came out first. So I think over the next year or 2 or 3, we will see a lot of approaches getting fully bedded in. I would say with IFRS 17, there isn't anywhere to hide. You have an awful lot of data. A lot of things to really understand as well, so be it a loss component or a CSM runoff, and the cohort analysis generally, it can be hard to fully understand, and it can cause some surprises from a not-profit perspective. So a challenge for sure, I think, in really understanding and, say, capitalising on the data, and perhaps a little bit as well in maybe reorganising internal processes. So say where an organisation was doing assumption setting in Q4, obviously it's far more important now to look at it not just from an economic standpoint, but how does that play out in a cohort year sense. And I think there's a value added piece to glean from that then, because you can really understand how the business is performing. And I think a few good things can come from it. However, it's insanely expensive, and it's taken a long time to get to where it is. Is it more intuitive to the external market? It's hard to know.
Yeah, it's a good segue, Brian, in terms of the group, the market.
Yeah, I think we all originally had the plan that this would be consistency. Like when IFRS 17 was coming out, I don't know when. It's 2004 we finished IFRS 4. I might have,
when we were sitting beside each other now.
Yeah, we were a lot younger and had maybe browner of hair and thinner of build.
More hair.
I think the amount of time it took us to get from there to here, like it's been so long to get there. And the market was hoping we'd get consistency of approach. And at that point in time, we had this idea that the FASB was going to move, the ISB would move, and therefore we would have one standard and we'd have comparability. And that was the key thing that the market wanted to see. And then that fell apart along the way. The ISB and the FASB fell out. That didn't happen. And what we've probably seen as well is a number of entities decided if they didn't have to go to IFRS 17, decided not to do it. So you've seen a lot of mutuals going, well, if I'm not listed, I'm not doing this. So the ability to actually compare has reduced. I think it does give a lot more transparency in our numbers, and I think, and maybe it's only over the next few years that we're really going to see that insight come through as that data comes through, and we see different tables and different we'll say, results come through and how loss components are changing year on year. But really, the key thing up until now, I suppose, is the CSM, right? And that's really given a new insight to the market to see how the business is not just developing on the books today, but will develop into the future. And I think that's just the learnings from year one from results, and that's a question that we get asked much more now in analyst calls because they're aware of it. Whereas in the old days, they weren't so focused on your Solvency II change in own funds. It just wasn't how it was being done. But now the CSM is a number and one that they really are much more focused on because it's so, in a way, it's a bit more forward-looking for your future results.
And it's a good point. So when you think about historically, or even up to 2 years ago, we'd have had premium would be, an important metric. My P&L result, I could understand it a bit more logically. Loss ratios, supplementary EV analysis was kind of understood. Have you managed to make that internal transition, whatever about the market needing metrics and explanations? Is it now kind of you've become unconsciously competent around IFRS 17 metrics and embedding that insight within your business, or what do you need to do to get there?
I think it's an evolution, Brian. I think some people are getting there faster than others, but they're probably closer to the business, or understanding that business. It's a huge change. I think Mark said earlier on, we've moved from like one standard to another standard. How that's all processes have changed to get there. How we understand the results, how we report those results back to the business, because that's so important to us all. It is something that we're still developing because they don't know the information they want as well, and we don't know the information that we want to give them. And sometimes we haven't built all those processes and systems to give them that information yet. But we will, and we will continue to evolve and iterate to get there. Internally, we are much more focused now on that CSM, on the adjustments, the risk adjustment, anything around us happening there, more than just the P&L bottom line. At Hannover, we always tried to say that premium wasn't our number one priority. It was always about the bottom line result. But the market cared. They want to see growth. They want to see that number. And therefore, we have to look at that as well. And somehow, when we do go to the market and talk to them, we try to say where we're going to focus on, where we think is important for our business, why maybe our business is different than maybe a traditional insurance company, what they should look at for us, and make sure that message goes out. But we need to have that same message then internally, so that when underwriters go doing results or go renewing business, they also understand what the market expects and what they need to achieve to get there. But it's an evolution.
I'd say it's a lot of the same really for us, Brian. So perhaps maybe from an operating profit standpoint, it's a more stable estimate now. It doesn't go up and down to the same extent with say one-off actions. There's a whole piece around talking about the evolution of CSM. So if your op profit is up or down, you can equally talk to how the CSM stock is changing. So at least there it talks a little bit to the store of value on your balance sheet. But I think then I'm back almost to where I started with all the data you have, and there's almost nowhere to hide. So it almost forces a lot of analysis internally to see, if I was to pick income protection perhaps as an example, you almost begin to view that as a profit centre in and of its own, because you see exactly how that part of the area is, or that part of the organisation is performing. Say such is the granularity of the data that's available. But I guess we will see it evolve over the next while.
And I was going to say, one of the things maybe, if we all look back at what was it, 2021 or 2022, where we all saw all the insurance companies make huge losses, but on an OCI basis, and no one's solvency changed. You could just see how the old standard wasn't fit for purpose. We weren't matching what was happening on the liability side with what was happening on the asset side. So IFRS 17 makes a lot of sense when it can solve problems like that. But I just think that was probably the starkest example of how disconnected accounting had come from economics when we saw that come through.
Then just introduce a broader topic. Both of you are a long time in the insurance industry. If you reflect on the last 3 to 5 years, what do you see as having changed most, or the drivers of success and how that has evolved?
say, across the market rather than finance particularly.
Yeah.
I'd say a huge thing anyway is to have real clarity on your strategy. So what is it you're doing over a medium term? You can see a lot of focus across organisations in a short-term plan, and the focus is on delivering plan. So it's really important to just have a lens to where the market is evolving and going, and to play a longer game in that space. An awful lot is happening in the market anyway, so you could touch on how things are becoming more customer focused. We have our consumer duty type focus coming into Ireland. Are there opportunities in that particular vein? And it isn't because we have more regs coming our way advocating for change. It's more the market is moving towards how can you be more of a waterfront player and offer a proper value add to our policyholders and customers over their lifetimes. So you can see the market and the models evolving in that particular direction. But a lot of things are constant too. So you have the focus on scale and efficiency. That zero cost planning piece is there all the time. There are many, many change opportunities available to organisations, and how is it you prioritise on the 2 or 3 meaningful change initiatives? The change capacity and the bandwidth within an organisation is a finite resource. So a lot of change, but a lot of the core ingredients I think are constant over the years as well.
I'd probably echo a lot of Mark's points there, Brian. I think if you think about what's happened in just the world in the last 3 or 4 years, we've gone from a position where like most people in insurance companies came to an office every day. Now we've got everyone sitting at home probably half the time, we'll say.
Be careful what you say.
But I think it's different. But every country's different. Like we're a global reinsurer, and in the US they probably come into the office once a quarter. Because they've had to adapt to that market. So every office is different. But a lot of the fundamentals are still the same. Like if you think insurance has been around for hundreds of years because it's about risk sharing and protection of people. Ultimately, that's what it's there. And that fundamental need is still in the market. Of course, markets are changing. Like we've seen sometimes we'll see growth up opportunities in parts of Asia, or you might see it in the US, or you might see it and also the products that they want. Like like cyber is now it has been the last couple of things as the big new risk, we might say. But there'll be another risk that will come up, or another need will come into the market in the next year or two. But a lot of the fundamentals are the same. But I think the other big thing is like, and we're not there yet, is around data and how we use the data that we get. As an insurance company or a reinsurance company, we have loads and loads of data. And are we using that effectively? Do we have the tools to use that effectively? And do we have the speed to compute that information effectively? I think that's what we're seeing. We're developing those tools. They're probably helping us make decisions, but we need to make those decisions faster and more effective in the future. And I think that's where we'll probably see a lot of things happening. So I think from an actuarial side, you'll probably keep jobs for a while. I think there'll be a need for that maths coming. But probably other professions are coming in, data scientists, people who are actually even moved on from that. It's not even that they do it in their head like an actuary did in the old days. They're just faster at processing it and doing the tools to do it. So I think that will be probably we'll probably see that change in the next few years.
It is an interesting point, though, that talent, all of this change, and a lot of change has happened. And, your thoughts on, the existing talent pool you have and actually where they need to develop. Do you have any thoughts on that? Yeah.
So I think it's a bigger question, Brian, I think for us is, how do we get new talent in, right? So we have our existing talent, and how many people grow up wanting to work in insurance? Right, and I think and we've been asking this question for years. So it's not seen as a dynamic, exciting industry until you're in there, and then we know what it's really like. But I think there's that initial challenge getting people in. Then we have what we have inside, and we have all types of talents in every organisation. We'll have people that are there for a very long time, who've had to move through all these changes. We've got new people that have come in and they've got new skills, but we need to use those. We need those people to keep being willing to change the rest of us. We can't, as I had a conversation with some newbies last week that I didn't want them to be Hannoverized. You know, that they came in because we think they fit our culture, but they shouldn't come in and become like us. They should be willing to change us a bit to do that, and we need to be willing to adapt and be flexible to what they have as well. So I think we have a lot of very talented people in the industry, but we want to make them change. We want the new people to change us a little bit, but we want to also be an attractive industry for people to come in. Otherwise, we won't get that new talent, and then we will suffer.
Like it's a funny one really, in that I think it is, if we look at what the core insurance market does and provide to the end customer, I think it's a really important market. We don't get the talent in that we should. We're not as seen as a very attractive sector to move towards, and yet we do provide a real service. It's advocating or say finding solutions to customers' real needs. So why is it, or how can we change the comms around our market to get in or to be more attractive to a wider pool? And it's something we should reflect on as a sector.
Fair comment. Probably more just a forward-looking lens. Where do you see the next, maybe the role of the CFO, the group finance function, the big things ahead? What do you? I wouldn't say what keeps you awake at night, but where do you see that over the next few years?
Well, I might start with the market, because I think in Ireland at least, and say perhaps for our own organisation, it is a growing economy. We have a lot of tailwinds from an economic perspective in our favour. So a growing market, a growing population, more disposable cash in everyone's pockets, and a growing retirement sector. So I think there are many opportunities in the sector. So it's perhaps the role of finance then is, how do we spend scarce resources in the right areas to capitalise on those opportunities? So ensuring an organisation has absolute clarity on its strategy, keeping a real focus on benefit realisation on the initiatives we spend and allocate budget to. And for me, I would go back almost to where I started with the trust, efficiency and insight. So how is it that finance can be very much in the business partner space and really help an organisation on that strategic journey? There is much more we can do.
Yeah, I think as a department, like that's been our strategy for the next 3-year cycle, is really like becoming a valued business partner, which again, I think if you go to any finance department, they'd probably say something similar. Might not use the exact same words, but it's about how do we use the accounting information we have on a real-time basis so that the business can make decisions. Okay, we can talk about the past, we can talk about reporting. They're all going to be you have to do's, but it's how do we bring the insights back to the business? Because again, what's so important for insurance business is we've got to be able to work out, like we do sometimes long-term pricing, long-term business, which we will sometimes get that price right, sometimes we'll get that price less right. How do we make sure that we learn from anything that we did wrong in the past, act on it if we can, and how do we make sure that as a finance division we're feeding that information back? Because we have to make sure there's a loop between pricing and reserving finance all together, that the information is not siloed in one place, that it's shared back. And I think that's something that I think we've always tried to do. We've gone through probably a phase of IFRS 17, we've had to, like finance has probably had to step back, you might say, to try to get that process bedded down, get the new information. And as Mark said, there's probably even more data now than we've ever had before in the past. How do we use that? It's no use just having data. Everyone can have data, but what do we use that for? And how do we support the business to make future decisions?
Brilliant insights. Listen, thanks a million for your time today. I suppose just in terms of those listening, is there what's one takeaway that you'd kind of offer up, having participated in this?
I would say it's to deliver on your commitments.
Very good.
It's vitally important.
I think the thing I'd always say to them is I'd be curious about about business, right? To any finance person, don't think of yourself as an accountant. Always be curious about the business as a whole, because that will help you understand it better, and you can add insights back to it. if you think of it, if you just think of yourself as my role is a siloed role, you won't add to the value in the business. And so I think be curious about the business.
Brilliant. So do what you're told and be curious. Yeah, that's good. That's good. Listen, Mark, Brian, fabulous. Thanks a million for your time. Hugely insightful, and we appreciate you taking the time. And more generally, thanks everyone for listening in. And if any of if anything that was discussed piqued your interest, again, you'll have your usual KPMG contact, or indeed, I'll be happy. Or pick up the phone to the guys. They'll do what they're told, and they'll be curious about the questions. So, thank you.
Thank you.
Thank you.